how does it move the dollar? Because, we're seeing perhaps this move towards common prosperity. We've also seen what the PBOC did. And let's face it, what are you looking at in terms of the Chinese economy and how it actually dovetails into how you look at it from an investment perspective?
Yeah, good morning. So it doesn't move the dial that much, I think. So, the numbers into the December number wasn't that strong. And you also have to consider that lockdowns really only started at the end of December. So, you could reasonably assume that it's weaker so far in January. As you hinted, a lot of what's happening in the slowdown in China, a lot of it is self-inflicted. Common prosperity, what's happening in the real estate sector, the zero COVID strategy, which is, Omicron is really not cooperating. It's difficult to see how we're going to have a much strength in certainly in the first quarter, or maybe the first half of this year from China, despite the support that's out there from the PBOC and later probably from the fiscal side.
Tell me something, is there likely to be a risk premium being built in, probably already to some extent already, where you actually have to take into account any further regulatory changes, as people are suggesting that does wane through this year and we concentrate on economic stability more than anything else?
Absolutely, and I think you would see that as a continuation of what happened since last summer, really, or even flagged before that. Yeah, absolutely, and common prosperity is the strategy of the government. They've got a political calendar this year that suggests that they're very unlikely to move away or go light on that. On their plans, and absolutely there's a risk premium being built in for that, certainly from an equity point of view. So to get more positive on equities in China, you're not only going to need to see underperformance, which we have, certainly from an offshore China perspective, but you're going to need to see a clear direction on return to growth and how could that happen. And from our side, I think the Omicron strategy or the COVID-19 strategy and exit strategy, if there is one, is going to be pretty significant there as well.
Kieran, obviously, China markets looking to the PBOC for support. I mean, further easing is expected. How do you position for that?
So we don't have an overweight position in China. We think that the easing that we saw today, it was it was 10 basis points. The expectation was maybe 5, but it's just not going to be enough to counter the economic forces that are at play here, both through, as we mentioned earlier, self-inflicted through the common prosperity initiatives, and also from external factors such as Omicron. So we would be waiting before we get more excited about China, and obviously, the China monetary policy is countercyclical to what's going on in the rest of the world, and we think there's a lot more opportunities, outside of China that we are much more excited about at the moment.
Is it time to get excited about Chinese tech, because Chinese tech lifted the Hang Seng Index to the highest in 14 months?
Yeah, if we were certain that the regulatory pressure is going to ease, then there's definitely a good story around a lot of the names. They've got scale. Some of them have innovation, but I think we need to see pretty clear signals around the end of this regulatory tightening cycle. Whether what's going on in Macau is a signal for that. I think it's much too early to tell. And certainly from the tech companies themselves, they're doing a little bit of self-regulating right now, where you're going to see a bit of pressure on costs and margins. But we'll come through the end of it. Obviously, we don't think the time is now, though.
We had Bill Ackman saying that perhaps the FOMC needs to actually come in with a 50 basis point hike in interest rates as soon as they can in order to ensure credibility. Discuss.
Well, they've definitely been quite clear that they're expecting to achieve liftoff, as early as March, and it could even be next month. I don't think that the 50 basis points is in the current range of expectations for the first move. But again, it's all about what's happening with inflation, and if it's not normalizing, then you could easily see 50 basis points in the first half of the year. We think. So I'm not sure if that's exactly what Mr. Ackman was expecting, but yeah, 50 basis points dependent on inflation easily.
What are you expecting, Kieran? 3, 4, 5, even more?
Well, so our sort of base case is that we probably see 3, and it depends on what's happening with inflation. I mean, to use the term, it's dependent on the data. So if inflation starts to moderate, partly due to where we are in the cycle, but also due to the central bank actions, then maybe 3 is enough. If it's not, then it's going to have to be more. Certainly, if you look at performance of U.S. 10s so far this year, and also bank stocks as a prime beneficiary of higher interest rates, then the market is clearly expecting that we're going to push through 1.8 on the 10s. The Fed is going to, as they say, achieve liftoff, and we're going to see rates higher than 2%, in the next few months, and that's part of what we expect as well.
Kieran, how about the dollar? It's been quite a quagmire. I mean, we hear about bullish calls, long calls for the dollar, but we're not quite seeing that strength. Why not?
Yeah, so obviously higher interest rates, good for the dollar in general. I think the long dollar trade was a little bit crowded. It made all the sense in the world, and I think where's the incremental buyer going to come from is what's stopping the dollar from strengthening any further. But certainly, if we do see again rates heading up above 2%, then we probably would see a little bit stronger dollar than what we have at the moment.